Hey guys, it's Max. How's everyone doing? It's noon here in Hill Country. Let's see what's going on with these Defiance and Yield Max stocks, maybe some of the other ones too. Let's kind of check the whole industry. All right, so we'll start over here with WDTE, Defiance S&P Fund. They sold options for about $23. Right now, it would cost nothing to buy them back. So they're making $407,000. Great job. However, they're still down 16 cents a share on the month. Dividend estimate's $1.43. I know it's less than it was yesterday. I found a mistake. I worked on it for 30 minutes or something. There's no more mistakes. I'm sorry, the dividend estimate's lower. It was making a bad calculation. Anyway, you don't want to know. I copied a zero down. I thought it was a formula, and I copied it down to another cell, and I put a zero in a cell, and I didn't catch it, and it made the anyway. All right, but I caught it last night. So Triple QY, these guys sold options for for $99. We'll call it 100, about $100, right? They sold the 19850 strike. It would cost nothing to buy those suckers back right now, so they're killing it. They're up $1 million right now, 69 cents a share on the month. And we have a dividend estimate of $1.84, which comes to 64%. IWMY, these guys sold options at it's 21.98 strike for 20. Let's call it 21 bucks. 21 bucks, and right now they would cost nothing to buy them back. So they're realizing the entire million they're going for. It's just a 37 basis point capture, which is damn impressive, which is $1.04 on an earnings per share basis for the month. That's pretty good. Dividend estimate, and I checked this one also, is 213, which comes to 73%. Dividend estimates are coming down as the market started to melt back up here. I will say this, though, even though the market's melting up, they're starting to kind of melt back up. Volatility is staying elevated. So for now, anyway. All right, so that's IWMY. So now let's look at USOY. Now, these guys, they had a 74.5 strike option. They covered for 4 cents, but the market was going up, so they rolled up to a 78 strike option, and they got $3.30 for that sucker. That's huge. I'm going to show that to you on the. All right, let's minimize that. Okay, so oil's pulling back today, but it's just been up so much. It's probably just a healthy pullback. It's doing what's called rechecking or retesting the breakout. It broke out right around here. Sometimes after a breakout, it'll come back and make sure it's still good, hold there, turn around and keep going up. That's what it looks like to me. We'll see, though. All right, so the big deal about the price, they sold the 78 strike option, so I put the top line of this box at 78 because that's max profit. Well, I had to drag this box down $3.30, so it comes down to the 74.70 level, right? To give you kind of a visual depiction of what we're aiming for. Gosh darn, now I messed it up. There it is. It's close enough. Okay. Now, but I wanted to direct your attention. Look how big, how tall this profit box is compared to some of these other ones back here. There's been some other big ones too. Oil's kind of interesting in the fact that it can, sometimes oil's price can appreciate. At the same time, its volatility goes up, kind of the opposite of what happens in the stock market. In the stock market, generally, if price is going up, volatility is collapsing. But this will be great for oil premiums. They're going to, for USOY premiums, I bet they have a big month this month. But anyway, we'll see what happens. This option doesn't expire till tomorrow. Okay, so now let's look at the buffer report. We're going to start with the index buffer report. Okay, so here we are in index land. Let's see what's up the most. ZIVB. Well, you remember yesterday it was down the most because volatility was kind of popped yesterday. Well, today volatility is subsiding and ZIVB is up the most. KQQQ is killing it. Look at that. Nice job, KQQQ. Look at SVOL, also up more than the index. That's great. everything's doing pretty well. SPY T's catching about 80% of the upside. SPY I catching about 85%. Anyway, nice job, guys. All right, let's look over here, see what's looking good over here. Look at QDTE catching all the upside, just about. Just missing the upside by 6/100ths. Triple QT catching a lot of upside as well, missing it by 14/100ths. YMAG catching a lot of upside. Everything's catching a lot of upside today. Even ULTY's up as much as its benchmark. I guess China's pulling back today because CLIP is down a little bit. China and oil are pulling back. And also it looks like BITO, Maxi trades options on BITO, and YBTC does too. And so they're pulling back. Other than that, everything's looking good. Okay, so now let's look at the call spreads. So this is the new strategy for the YieldMax universe, where they've uncapped the upside. This is such a genius idea. So they've uncapped the upside on virtually everything. So all I did is I made a chart. So like AI right now, as well as, hang on. All right. AI and NVDY are actually in the money. They're actually trading above their call spreads, which means they're actually making extra money by virtue of having the call spread there. Now, there's some other ones that are close. You can see I have it shaded. These are close to busting out. Now, yesterday, I believe TSMY was in the money. They rolled to a 187.50. That's why I wrote an X. I need to think of a way to indicate it was a new trade. It was also a new trade for crash. But now that I remember that I did that wrong, it was actually Tesla, not crash. Sorry about that. Okay. Tesla had a new trade also. They rolled it to 267.5 strike option. So they're about 8% out of the money from that call spread paying off. But we'll keep an eye on this. But you can see BABA, SMCY, TSMY, Abney, Jomo, they're all getting close to taking advantage of their call spreads too. So now let's look at the meme stocks. Let's go to meme stock option land. All right, meme stock option land. Okay, so right here around the election, of course, these meme stocks are election meme stocks. So the main one we're following is this one. This is an Uber bull. This is if you're a MAGA guy. This is a way to make money if you think Trump's going to win the election. You can also go bet in the betting markets, but it's about 50-50. So you only make 1-to-1. This is a way to bet on Trump and have convexity. You might say it has max convexity. I designed it to have max convexity. I'm not saying this company's good. In fact, it's a bad company. I'm just using it as a proxy for the volatility around the election. Or I don't know if it's a bad company. It's just a company. We're just using it as a proxy. I'm not saying go buy it or that I like it or whatever. But so what we did here is we put on a calendar spread. The calendar spread expires after the election, and it has a short option in it. That short option is ridiculously overpriced. So it's allowing us to put on a trade with real advantageous risk reward, because that short option is so highly priced, and we're selling that to buy another option doesn't expire till next year. That's not so overpriced. In any event, all right. So let's see this trade. Let's see here, but it looks like Trump's doing better today. So we're going to check the polls too and see if the polls. Well, not the polls. We're going to check the betting markets to see if they agree. But no, this trade cost about $400. And, you know, if he wins the election and maybe the stock goes to 40 and volatility pops, which it will if he wins the election, this trade would be worth $2,800. So it's a way to get long. Now, there's also it's also possible that he could win. There's no guarantee the stock goes up because he wins. He could win and the stock could still go down. But anyway, this is a fun way to kind of play it. So we'll keep an eye on that. but that was up like $100 yesterday, and it's up 400 today. So whatever happened overnight, he's kicking ass. So let's look over here. Now we have the opposite trade. If you're in the opposite camp and you think it's all BS, here's a way to bet against it. This is a broken wing butterfly, and I'm not recommending this trade either. But we're using it as a proxy, and it was down like $90 yesterday, and it's down more today. But that's what we'd expect, because this is the bearish trade, so this is doing poorly. So let's go check the betting markets. I don't use the polls because polls are political and biased. They missed it really bad in 2022. Remember, they called for a red wave, and it wasn't. They missed it really bad in 2016. They said Hillary was going to win. They missed it really bad in 2020. They always miss it because they're political. The betting markets, people have to put their money where their mouth is, and it makes an efficient market more like the stock market. So anyway, let's see what's going on. Oh, Jesus, yeah. It was tied yesterday, and he's 4 points ahead today. So this is and you can definitely see it in the stock prices. Okay, so we'll keep an eye on that every day. Now, other than that, it's not just political memes. We have one other meme stock to look at. I thought this one might be a fun one to do. I was trying to show how you get max convexity out of one of these meme stocks. I think it's this one, yeah. Okay. This one's kind of a crazy trade. Same thing as the Trump trade, because GME, because people think it's going to get, because it's a meme stock, and people think it's a short squeeze candidate, which it probably is, and it gets short squeezed all the time. It has super, super high volatility, just like the Trump stuff around the election. And so I was able to do a calendar spread to sell a call that was ridiculously overpriced, use the proceeds to buy another call that expires behind that. But anyway, this one right here could be really fun for somebody. This one costs $700 to put on, doesn't expire till next Friday. If GME goes to $30, it's worth $1,900. If GME goes to $35, it's worth $7,500. If GME goes to $40, it's worth $19,000. That's max convexity. That's what convexity is, when you have a tailwind, when your reward is more than 1-to-1, in your favor. And look, no matter how far this thing goes down, how far GME goes down, or what, if it doesn't get taken over, you're going to lose $700. But then on this, also, I didn't cap the upside. God forbid if it should get going again like it did a few years ago and go to 100 or something, this trade would be worth $29,000. Anyway, so that's just a fun trade too. We'll keep an eye on that. I can do other meme stocks too. If you guys know of another meme stock, put them. We'll look at that. But also, I have that GME trade for people that don't want to spend $700, because you're probably going to lose every penny of it. That trade is a low, high reward, but low probability trade, right? So I made a small account version of the same trade. Cost you $77 instead of $700, but it's the same math. I see people YOLO on Reddit all the time, and it's just in buying shares or whatever. Yeah, that's fine. Go buy shares if you want to, but I'd rather spend $77 and, if I can get it to 35, make 514. If I can get it to 40, make $1,300. If it goes to 100, make $5,900. Anyway, this is the same trade. You're selling the 40 call. It was 40 cents. Think about that. A 40 call that expires next week was 40 cents. It's only 8 cents now, but it's 40 cents when we sold it. But that's what's financing. We sold 3 of those, and then we bought 4 calls and the expiration behind it with the proceeds. All right. So it's just a way to get long without a lot of risk in a meme stock. It only works in stocks that have super high volatility. You're taking all the super high volatility from all the YOLO people that have driven the option premiums up, and you're using it against them, or using it to make it in your favor. All right, so let's see what else we have. And then we also have the $1 million baby trade, which is the New Year's hedge trade, in case just if you had $1 million portfolio, and this protects you for the rest of the year. Right now, this trade's down because the market's up. You know, on days the market's down, this trade's up anyway. But it doesn't expire to New Year's Eve, so we'll keep an eye on that one as well. All right, let's check back in on the market one time and see what's up the most and down the most. All right, so MSTR up the most. NVIDIA also up a lot. Tesla up 1.6%. Look at NASDAQ. NASDAQ's up. NASDAQ's like a meme stock. It's killing it. All right, so let's talk about the volatility model real quick, because the volatility model's bearish, so I'm not happy the NASDAQ's going up, but I think it's a dead cat bounce, or it's not real. All right, so I reconstructed the volatility graphic, but basically I'm trying to think of a better way of explaining this. All right, when this moving average is going up, that means volatility is going up, trending up. It means people are putting on hedges. People are buying protection. So that's why that usually happens when the market's going down. So that's what turns the signal from red to green and back again. But in any event, you can see what I wanted to show is you can see that, yeah, we're selling off a little bit today. We even got under the Bollinger Bands and started trending down a little bit, but we're still so far ahead above this 200-day moving average. This is the risk on, risk off line. So it would have to drop a lot more to make the system bullish. So I think this is a dead cat bounce. So we'll see. We'll keep watching this. And the reason we'll know whenever it's time to buy again, this will start trending down and people will start taking off hedges. But we'll keep an eye on that. All right, guys. Well, I appreciate you all for being here. You guys have a good day. I have some good content coming out this afternoon. I know I said it was going to come out yesterday. I'm doing some content on 100-year. It's called the 60-40 Portfolio's Dead. Still coming out this afternoon, and then I have some other special content coming out too. All right, guys. I appreciate y'all. Have a good one.